Welcome back, ladies and gentlemen. I hope that you have a very wonderful lunch, before you come back here. Now, as promised, we have a very, very strong heavyweight speaker for today. And the speaker that will come up next is truly a heavyweight. Now, but before we come to that, perhaps, we could do a bit of the online polling about a question first. Now, if, we can post this question to the screen. This is a question about that. Which of the following, in your view, would be the most critical factor for listed company directors in pursuit of the future success of their companies in light of the prevailing challenges and opportunities? Now, we have 4 possible answers. Now, you're only allowed to choose one. Now, first one is that Hong Kong's appeal as a capital market, competitive internationally with New York and London. The second one is truly a hot topic now, Hong Kong's COVID-19 measures and its ability to attract talent. The third one is business integration with Greater Bay Area. And the last one is responsible directors acting with integrity and diligence in making business decisions. Would you please? Wow, we are starting to see results. Now, honestly, at the backdrop of all the discussion about the COVID measures, I would have thought that, the second one is, it's picking up now, 26, 27. Wow, you're listening. But honestly, with the topic that we are going to cover in this session, I think the first one is actually, becomes naturally, the right answer for this. Hong Kong appeal as a capital market, competitive enough internationally, comparable with New York and London. So I think, we all express our views here. Now, back to this session. As I said, we have a truly heavyweight speaker for this session. We have Tim Lui, chairman of FRC. Could I have a round of applause, of welcoming Tim? SFC, sorry. FRC chairman is down there. I just had lunch with, Kelvin, so I just make it confused. FRC, sorry about that. SFC. Tim is actually a very good friend of the Institute and also to myself as well. So we are very delighted that we have Tim with us. And then, as the topic implies, we expecting a team, to touch on, Hong Kong being an international financial market, all the challenges and opportunities and so on. And we have, all the bio about Tim in the information pack. So I don't think, we need to run through, the bio of Tim. Everybody knows Tim very well, honestly. So before, we have a discussion and question and answer, Tim will be giving us a speech about, his views on, Hong Kong being an international market. May I invite Tim, take the podium and then share with us your views.
Well, good afternoon, ladies and gentlemen. Thank you for inviting me to this year's Directors' Conference. This is an occasion for a double celebration. The 25th anniversary of the establishment of the HKSAR, which happily coincides with the Silver Jubilee of the Hong Kong Institute of Directors. I've always been very impressed with the fine work that the Institute has done to promote good corporate governance and professional director practices in Hong Kong. Today, I want to take stock of where we stand in our work to drive a top-notch financial market, and how the SFC, together with the company directors and INEDs, play a role in this very important effort to continue Hong Kong's success as an international financial center. The theme of this year's conference, From Resilience to Sustainability, aptly sums up Hong Kong's remarkable transformation over the past quarter century. From a very small market serving mainly local companies and retail investors, to a leading international financial center and China's essential gateway to global markets. This has been a time of rapid change. Our markets are now larger, more complex, and interconnected than they were 25 years ago. The number of listed companies jumped nearly 300% to 2,577 last time I looked. Mainland firms now account for 54% of all our listed companies, and 78% by way of market cap. But the measure of a market success is not only in its size, profits, or global reach, but also in its ability to withstand negative shocks and turbulence. Over the years, Hong Kong went through the Asian financial crisis, SARS, the global financial crisis, and more recently, successive waves of COVID-19. These were all defining moments that showed Hong Kong's strength and resilience in overcoming challenges. Some of these events came fast and fierce, while others were prolonged and left a lasting impact. But through them all, the Hong Kong market has come out stronger, more resilient, and sustainable. In large part, the positive change can be attributed to the increasing integration of the mainland and the Hong Kong markets. The QFII scheme was introduced back in 2002, and today, the Connect schemes are a permanent fixture of both markets. These and other initiatives have greatly expanded cross-boundary two-way capital flows. They provide investors with unparalleled access to mainland China's financial markets via stocks, bonds, ETFs, and wealth management products. But then, these mutual market access programs would not be possible without the solid regulatory and enforcement cooperation between Hong Kong and the mainland authorities, particularly between the SFC here and the China Securities Regulatory Commission, CSRC. This is because both we and the CSRC are firmly committed to safeguarding the interests of investors and the integrity of the two markets. I will also add that the successful implementation of one country, two systems and the national security law have laid a solid foundation for Hong Kong's prosperity and stability in the long run. Now, at this point, I would just like to tell you a little bit about what we do as the statutory regulator of Hong Kong's securities and futures markets. Some may see us as a security watchdog, a licensing body, or a law enforcement agency. But these are just some of the hats that we put on to maintain market integrity and protect investors. And not only that, we are also duty-bound to develop our markets by promoting their competitiveness. This means supporting their growth and ensuring they are fair, orderly, and transparent. As a regulator, one of our main jobs is to nurture an environment with a high degree of efficiency and integrity in order for the commercial sector to develop its businesses and thrive. The SFC has been able to achieve this by laying down the appropriate regulatory framework and infrastructure and maintaining proactive oversight of the activities of market participants. Let me give you a few examples. On mutual market access, we work very closely with both local and mainland authorities on the establishment of the Connect schemes. Now, to help us better manage risk across the cross-boundary and also to monitor market activities, we propose a new investor identification regime for Hong Kong. Subject to market readiness, this particular regime will tentatively be implemented by the year-end, beginning with the northbound trading into the A-share market. On new products and development, I should also mention the MSCI China A50 Connect Index Futures, which was launched last October. This provides global investors with an excellent risk management tool to hedge their exposures in the A-share markets, and it has been a tremendous success. We are also making good progress in new areas such as open-ended fund companies and virtual assets. The number of registered OFCs have grown more than 4 times, and the SFC was one of the first regulators to set out a licensing framework for virtual asset trading platforms. For the listing market, another key focus is to ensure the market growth is sustainable. So we, together with the Stock Exchange of Hong Kong, regularly review our listing regulation to enhance the quality of our markets. Over the past few years, new listing rules have allowed pre-profit biotech firms, companies with a weighted voting rights structure, overseas issuers, and special purpose acquisition companies to list here. It is worth noting that Hong Kong was the world's #1 venue for IPO in 7 of the past 13 years. And last year, Hong Kong was Asia's largest biotech funding hub and the 2nd largest in the world. Of course, it is crucial that our markets and financial infrastructure are backed by sound regulatory framework and impartial enforcement action. Since we adopted the front-loaded regulatory approach 5 years ago, we have often intervened at an early stage if a corporate action or a proposal may be harmful to the investing public. Using our statutory powers, we may raise objections to listing applications and transactions proposed by listed companies, or direct the stock exchange to suspend trading in a company's shares. Over the past 5 years, we have directly intervened in nearly 170 cases involving IPOs or listed companies. On the enforcement front, the SFC is determined to hold directors and senior management accountable for their misconduct and rules breaches. Just over the past 5 years, we took enforcement action against 71 listed companies' directors. Almost half of these cases were related to corporate governance issues. The other half mainly concerned listed companies' disclosure of inside information or false or misleading statements. During the same period, we investigated more than 400 cases involving possible corporate misgovernance. That's about 80 cases per year on average. Now, I don't want to sound alarming, but this is just a reminder that all of us here, regulators, companies' directors, INEDs, and senior executives, have a part to play in upholding the quality of our markets. So this brings me to the very important topic about the vital role played by directors. Our robust regulatory framework and market infrastructure help maintain market integrity and strengthen our competitiveness as a premier listing venue for companies with quality profits. But to keep our markets fair and orderly, it takes responsible directors who act with diligence and integrity. We are working hand in hand with listed company directors to attract the best companies to list and the best investors to invest in Hong Kong. This is no doubt a common goal for both regulators and directors. And we also have a shared interest in maintaining good corporate governance and upholding shareholders' rights. This is especially relevant nowadays, as investors are increasingly concerned about the board performance of listed companies and how minority shareholders' interests are being safeguarded. Time and again, research studies have shown that there's a well-established link between a company's corporate governance and share price performance. Investors, particularly institutional investors, place higher premiums on companies with good corporate governance, and the opposite holds true too. This is especially in the case in times of crisis, such as during the pandemic. Under the Hong Kong law and the listing rules, directors, both executive or non-executive, are subject to the same legal duty and duty of care, skill, and diligence, and are responsible for the management and operations of a listed company. Directors must also ensure that a robust and effective control and risk management framework is in place, and they pay sufficient attention to the company's affairs. I should stress here that an INED is more than just a compliance role. INEDs represent a third of a listed company's board, and they play an additional role of acting independently as a check and balance on executive directors. So they should also avoid overboarding. It's simply common sense that where a director sits on far too many listed companies' boards at the same time, their ability to allocate sufficient time to their duties in respect of each company's board would come into question. Without effective directors, and if left unchecked, corporate fraud and misconduct involving listed companies may threaten to hamper investors' confidence and Hong Kong's reputation as an international financial center. Now, on the subject of moving towards sustainability, for Hong Kong to strengthen its positions and step up a notch, it must capitalize on opportunities to further connect mainland China with the rest of the world. This is key to driving Hong Kong's sustainable long-term growth and staying competitive. At the SFC, we are proactively pursuing multiple initiatives to achieve this, with a sharp focus on developing Hong Kong as a fundraising platform for mainland companies, a global asset management center, a key driver of the Guangdong, Hong Kong, Macau Greater Bay Area, as well as a green and sustainable finance hub. In many ways, these four goals are interconnected, and they all intersect with the key areas of the SFC's regulatory functions and our day-to-day work in corporate finance, asset management and investment portfolios, products, market infrastructure and development, as well as green and sustainable finance. And at the core of these four goals is the central government's unwavering support for Hong Kong's development, as the two markets deepen their economic integration. Just earlier this month, the CSRC announced initiatives to broaden the scope of Stock Connect, such as including Hong Kong listed foreign companies in southbound Stock Connect. The CSRC has also supported initiatives to enhance Hong Kong's position as an offshore renminbi center and a risk management center. For instance, introducing treasury bond future in Hong Kong and including renminbi-denominated securities in southbound trading. Now, these are all very positive developments. However, businesses and listed companies must also brace for challenges and volatility under the current macro environment in order to be sustainable and thrive. What this means for directors is that they have to be aware of and be able to navigate them. I'll just name a few examples. First, heightened geopolitical tensions are affecting businesses and firms amidst mounting pressure on supply chain logistics and higher operating costs. Secondly, the pandemic has adversely affected businesses and firms in many ways, notably in the supply of talent. COVID measures have prompted some multinational corporations to reconsider their staffing plans, and some firms are facing serious challenges in recruiting overseas professionals. Thirdly, as an open market that is closely connected with both mainland and global markets, Hong Kong is feeling the effects of recent market volatility and the slowdown in the mainland China's economy. As always, the SFC prioritizes the resilience of our financial system, which has been well proven to withstand high volatility and shocks, enabling our markets to operate effectively without interruption. For instance, when some Hong Kong-based listed mainland property developers were facing adverse credit events recently, we acted promptly to gauge firms' exposures and ensure that they had appropriate risk mitigation measures in place. On the other side, and what of the opportunities that can add new impetus to Hong Kong's long-term development? For one, fintech and technological innovation can provide stimulus to our economy and create job opportunities. The government is driving a number of developments in innovation and technology to bolster Hong Kong's competitiveness. In the financial sector, the growth of digitalization allows financial services to be automated and provided at a lower cost. The SFC fully supports the use of innovative financial technology, which provides clear benefits. We have licensed several digital wealth management advisory platforms, or so-called robo-advisors, which can help retail investors diversify their portfolios more efficiently and at a more reasonable cost. Over the past few years, we stepped actively into the virtual asset space, adopting a same business, same risk, same rule principle to regulating these activities. And at a time when other jurisdictions are tightening regulations, we already have in place a consistent and transparent regulatory framework for virtual asset activities, which provides a solid foundation for that industry to develop. Our approach is a practical one, to provide a well-defined regulatory environment which fosters innovation, market development, and investor protection. This lays a solid foundation for the virtual asset industry to grow in Hong Kong. Next, I believe we are all familiar with the tremendous potential of the GBA area. Many sectors of the Hong Kong's economy, including finance, logistics, and professional services, stand to benefit, and they can also contribute to the market integration in the Greater Bay Area, and indeed to our nation's overall development strategy. One clear example is the introduction of the Wealth Management Connect last October. More than 100 SFC-authorized Hong Kong domicile funds managed by over 30 asset managers were made available to mainland investors via Hong Kong banks. This helps facilitate cross-boundary retail investment and address the demand for wealth management solutions from the massive investor base in the Greater Bay Area. And finally, we are seeing extreme climate events happening all across the globe. As our nation is striving to achieve a carbon neutrality before the year 2060, Hong Kong is in a unique position to connect the flow of green and sustainable finance funds with the mainland and the rest of the world to promote green investments. The SFC is helping to transition the financial ecosystem towards carbon neutrality by co-leading the Green and Sustainable Finance Cross-Agency Steering Group, which comprises the Hong Kong government and fellow local regulators. We are also driving global action to address sustainability and climate change through active participation in standard-setting bodies such as the International Organization of Securities Commissions. We support the standards for climate and sustainability disclosures proposed by the new International Sustainability Standards Board under the IFRS Foundation, and we have been evaluating its potential adoption in Hong Kong. It is our shared responsibility to act on climate change. With all of us making a contribution, I'm confident that Hong Kong can become a leader in green and sustainable finance in the Greater Bay Area, as well as regionally and globally. So the conclusion I want to make here is that driving a resilient, top-notch financial market depends on the shift to sustainable practices. And listed companies' directors can definitely play a key role in making this happen. I have every confidence that businesses will thrive if company directors are able to steer through all the challenges I've mentioned. The key is to seize every opportunity with the right balance of business acumen, ethical standards, and integrity. Responsible business practices will help build stronger and more resilient companies and drive long-term sustainable value. The Hong Kong Institute of Directors has made considerable effort to foster a strong corporate governance culture and promote director professionalism in Hong Kong. As the Institute celebrates its 25th anniversary, it can look back with pride at a job well done. The SFC look forward to working with the Institute and other partners at home and abroad to maintain Hong Kong's position as China's most important international financial center. Thank you very much.
Thank you very much, Tim. May I invite you to take your seat? Well, I think it won't be an overstatement to say that, the Hong Kong, especially the Hong Kong investors, are actually owe a great gratitude, to SFC for, keeping and upholding Hong Kong market as a fair, equitable, disciplined, and also transparent watchdog for the capital market of Hong Kong. I think I also be thankful on behalf of the Institute that, as Tim just mentioned, that the relationship between the Institute and also SFC, have been strong for many years. And we also see that, we have to work together, try to promote Hong Kong, to go further, go stronger, in keeping the market, one of the international markets in the world. Now, we don't have too much time, so let me jump into the questions that we have for Tim. Now, I have one here. Tim, you just mentioned about that geopolitics. Now, how do you see that? Hong Kong has been caught up in geopolitical tension in the region. How has Hong Kong's position as an international financial center been affected? And has that affected the SFC's policies in regulating the capital market?
Thank you, William, for that question. I think geopolitics, it is a bit unavoidable nowadays. And Hong Kong, in many ways, is caught, in the middle. So we have to deal with it, and Hong Kong has been dealing with geopolitics for quite a while now. It's an understatement to say that it hasn't affected us. Of course, it has affected us. But on the other hand, Hong Kong is in a unique position, with mainland China behind us and supporting us, throughout. And as I mentioned earlier, the CSRC and the State Council are, very supportive. President Xi, when he was here on 1st of July, indicated that, we have to continue with where we got strength. And clearly, international financial center is one of our key strengths. And so we have the backing of the nation. And to us, deepening the Stock Connect scheme is important. So you hear this term called Stock Connect 2.0 lately.
Yes.
And that is a process that we have started with CSRC to discuss about what other products and services can be included, even with some of the current sort of features. How can we deepen it? And how can we even relax it further? Wealth Management Connect, GBA, is a huge opportunity for us. But it is a very modest start, frankly speaking. So we need to push along and make sure that, we are able to leverage that so that, the Hong Kong financial services sector can bring its services and skill sets to a much wider group of investors, which they also are in, urgent demand for a lot of investment advice and services as well. So from our perspective, we are we're working very hard to make sure that our infrastructure and system does not have any systemic risk.
Yep.
Now, throughout a lot of market volatility and turbulences, the market has been operating very smoothly, with no interruptions at all.
Yes.
So I think that is a key feature of a major IFC, and we are very keen to continue with that. So it's a combination of all these things, which, despite geopolitics, I think we have to work hard ourselves gain a better future for ourselves.
Yeah, sure. We should be cautiously optimistic about the future of the Hong Kong capital markets. Now, I have a question from the floor, from an anonymous audience. The question is, has SFC played any role in the US PCAOB auditing some of the US listed Chinese firms in Hong Kong?
I think this stems from the fact that you introduced me as chairman of FRC. Kelvin is in the best position to answer this particular question, because the SFC, of course, is interested in the whole issue.
Yeah.
And we are pleased to see that at least there's a framework to see whether further cooperation and operation of the inspection can work smoother. So what's happening in Hong Kong at the moment is going to be very interesting, the result of it. And there are teams from the mainland authorities here, and then, of course, as our counterpart, if the CSRC have got people here, if they need any support, the SFC will be more than willing to provide that. But on the other important issues, I have to defer to the FRC chairman, Kelvin.
Okay. Well, time is really running out. So I have a very short question, but a little bit, more personal one. I hope that Tim can come back with a short and, a sweet answer for us. Tim, if you have one wish for the next 12 months with your SFC perspective, what would it be?
The lifting of COVID measures, so that talents can come back to Hong Kong, and Hong Kong can have and Hong Kong economy can restart its journey.
Yes, thank you, Tim. Now, it's not that we don't want to borrow more wisdom from Tim, but just that time is running out. So can I invite you, put your hands together again, for the wonderful sharing by Tim. That is a little token